What was interesting was we were well below 110. It's up today. Let's talk to Amrita Sen, founder and director of research at Energy Aspects. Number one, it did, Amrita, come down pretty swiftly from over 120, and now it's up today. These are all moves that are difficult on a daily basis to try to discern what's actually going on. But what do you think the current situation is in terms of both supply and demand? Maybe there's demand concerns with the Fed getting in here actively.
Yeah, that's exactly what it is. It's much more the concerns than changes on the ground. You know, we actually haven't seen any data. And if anything, the kind of preliminary demand numbers coming through, be it Asia, be it Europe, very, very strong numbers. On-road diesel and gasoline demand still remaining very strong. Jet fuel demand, I think if anything, what we are seeing in jet is that the demand can't be satiated. We have so many flight cancellations because of the lack of labor, rather than prices deterring people. I think that's the difference this time around. But yes, the market is definitely scared of a recession, given Fed hikes and given that the Fed hiked by more than what it had guided to. So the kind of thinking is that Fed will have to get interest rates to levels that are so high that we have to go into a recession in order to control inflation. So that's very much what guided that move down on Friday, which was, of course, a clear sign that there wasn't a lot of liquidity in the market either. But what I will say is that, look, we are factoring in a mild recession in the second half of next year anyways. We shouldn't underestimate China's impact, right? A big part of the inflationary impact or the feedback loop that we are seeing on inflation right now are the supply chain issues. And that's because China is still shut down. We need those factories to restart, which is starting to happen. Once that happens, a lot of the inflationary pressures will ease despite high energy and food costs. So I'm not saying that won't be a big deal, but the depth of the recession doesn't have to be as acute if China opens up.
China has a different dynamic in terms of COVID, and I just wonder where they are. And it matters to the global economy at this point, because things here, there's more being written a day that, you know, cases are up, but deaths are sharply lower. It's almost looks like it's in the rearview mirror. But is that same scenario going to play out in China? Is that what we should figure? That give it another couple of months and they'll be back to some type of normal for supply chain issues?
I don't think it's going to be that soon, because China still is sticking to its kind of zero COVID policy. Granted, they now call it the dynamic zero COVID policy because they are kind of doing more testing regionally, allowing workers to go back to factories. So the restarting of factories is just happening. It's going to take months and well into next year. But we do understand Xi Jinping is under a lot of pressure to open up, given, like you said, the whole world is almost now treating COVID as if it's endemic, except China. So they have the Party Congress, the 20th Party Congress in October. That is going to be a very, very important event to follow, because that's where, if there were to be any big changes announced to China's COVID policy, that's when it will be announced. And then it'll kind of ripple through into next year with the reopening. I'm not expecting international flights to get there anytime soon, but even a domestic reopening will go a long, long way in easing some of these inflationary issues in the West.